All right, if you've been paying attention to the news, especially if you follow anything related to startups and crypto, you have for sure heard of the FTX implosion, where FTX went from being one of the largest crypto exchanges in the world, worth over $36 billion by investors, to essentially zero, bankruptcy, massive implosion. The last thing I just read this morning is that they just went to bankruptcy court this morning and their lawyers admitted that a huge chunk of funds has gone missing, maybe stolen, all kinds of craziness. Anyways, that's not even the worst thing. The worst thing is that this failure is going to have ripple effects, in my opinion, for years to come. Stay with me, and we'll cover all the different ways in which the FTX implosion is going to have a ripple effect, and frankly, a bad one, in venture investing, in crypto, and Web3 and other areas. So what happened with FTX? I mean, Sam Bankman-Fried was viewed by many as like the next Mark Zuckerberg, this like luminary in the crypto space, educated at MIT, just like brilliant when it came to computer programming and Bitcoin and blockchain and crypto and so on and so forth. Also kind of a crazy individual, right? With, you had Mark Zuckerberg with his hoodies and flip-flops, but Sam wears like a giant fro, bigger than me and mine, sweatpants, sweatshirt, t-shirt, whatever. Kind of this like really interesting, outspoken, controversial in some ways figure, but admittedly, at least everybody thought as being someone that was absolutely brilliant. And for a little while there, he was like the savior of crypto. So as all these companies were collapsing, he was coming in through Alameda Research and through FTX and buying them up, buying them, and basically saving a lot of these crypto businesses and trying to inject more trust into the system. And so it's kind of crazy that the guy that was basically the savior of crypto is now one of like the poster children for like all of its excesses and destructive power and fraud and everything else. So what happened with FTX? Well, the real quick version, based on everything I've read, is that essentially FTX was this like trading platform, and it was kind of like a bank. So they printed money called FTT, and FTT was kind of this token that was used to facilitate trades on their platform, but also to reward users. And lots of Web3 and a lot of crypto companies have their own token, and they use it for similar things. So that part's not uncommon. But essentially, as FTX built a better and better and better trading platform that became more and more popular with different traders, whether they were hedge funds or individuals, essentially what started to happen was that FTT token became more and more and more valuable. But it was only really valuable to people that believed it had value. Peaking at about $80 per token versus its current price of like less than $2 a token. And essentially what happened is Sam would use FTT as his own currency to acquire other businesses, prop them up, make risky investments, all kinds of things. And furthermore, he was essentially pulling money out of FTX and putting it into Alameda Research, his defunct now hedge fund, to place a lot of these bets. Anyway, so a little while ago, CoinDesk came out and wrote a report that basically said that Alameda Research was holding on to a massive amount of FTT. Now, that's important because if anything happened to FTT, or if anything happened to Alameda, which was backing a lot of its investments with FTT, such that FTT started to go down in value, it could take down the entire FTX trading platform. Anyways, that happened, and simultaneously, Sam had been having discussions with politicians. I don't know if you know this, but Sam was one of the biggest financial backers of the Democratic Party and candidates. So he had a lot of tie-ins in government. He was pushing hard for different regulatory action that would have negatively impacted some of his competitors like Binance. Now, Binance is an interesting story in of itself because the CEO, the founder of Binance there, this guy named CZ, he's quite the character. Binance is the #1 trading platform, but also has had a lot of issues with regulators over the years. And there's a lot of skepticism about whether or not they're doing things right. And so basically Sam was like pushing to take out one of his biggest competitors. The thing that's ironic though is that Binance used to be an investor in FTX and helped kind of get them going. But not too long ago, FTX reapproached Binance and said, hey, we want to buy you out. And they ended up buying them out with, guess what? That same token, FTT. So at the end of the day, Binance was sitting on about $2 billion worth of FTT. And the thought was that if they've got $2 billion of FTT, then they still have an incentive to make sure that FTX succeeds, because otherwise, if FT implodes or drops, then Binance will lose $2 billion. But CZ did something kind of unexpected. He heard about what Sam was doing. He read the report from Alameda, at least that's what everybody is speculating, and then announced on the market that he was going to dump his FTT. That shook the entire market, and all of a sudden, tons of traders started to have real worry and fears about FTT, and there was a huge run on the bank, essentially, where everybody was coming to the platform and trying to pull out all of their money and exchange their FTT for hard dollars or for Bitcoin or Ethereum, which, you know, is a more stable currency. Well, when that happens, when you have lots of sellers of a currency, that currency is going to drop in value, right? Because essentially what happens is there's more supply of FTT than there is demand for it, and so the price ends up dropping. Well, if the price drops too low, all of a sudden that causes major issues for FTX as a trading platform, and it makes things really hard on Alameda, which has backed a lot of their investments with FTT. So Alameda comes out and says, hey, we will hold firm on the price and we will buy up FTT, but ultimately they didn't have enough reserves, and so Alameda goes down, pulls down FTX with them. The whole thing kind of collapses in on itself. Okay, so I've spent a lot of time talking about like what happened to FTT, but let's talk about what the impact is going to be. So one of the things that a lot of people appreciate is not only did a lot of venture funds lose hundreds of millions of dollars investing in FTT and FTX, including some of the greats like Sequoia and Index. That's bad, but what makes it even worse is that FTX, Alameda, and Sam, which is all like this big convoluted mess, so who knows exactly what entity it was, they made investments in some of these funds too. So it was like Sam would come in and say, yeah, I'll invest $100 million into Sequoia. Sequoia then turned around and invested $200 million in FTX. So it's kind of incestuous there. And I don't know the exact number, so I could be off on how much. But we do know that he was invested in a bunch of venture funds. He was also an anchor investor in a bunch of venture funds that focused on investing in Web3 and crypto. In fact, I know several where FTX was effectively the anchor investor. And the anchor investor usually means that you're writing somewhere between a 5 to 30% check of the overall fund. So when you lose your anchor investor, which effectively is what's going to happen, right? Like FTX collapses, they're not going to make their capital commitments to these funds, right? They're not going to be able to fund them. And so all of a sudden, there's going to be a bunch of crypto-related venture funds that are going to collapse probably under the weight. Or at a minimum, if they don't collapse, they won't be able to deploy as much capital. They won't be able to support their Web3 startups in what's arguably going to be a very rough, tough crypto winter at a time when they desperately probably will need that additional cash. And so I anticipate you're going to see ripple effects in the venture space as, you know, FTX isn't able to come through on their capital commitments. Ultimately, like Sequoia, Index, some of these large funds, they'll be okay, but this will give them a pretty big black eye. But some of these other smaller funds that are newer in the crypto space, they probably won't recover from this. Some of my good friends that have worked at funds in the crypto space have recently been laid off or have left, largely disillusioned with the space overall and all of the kind of unethical practices that are going on. And then lastly, it's a lot of trust has been removed from the system. You know, there have been a bunch of crypto naysayers that have said, you know, crypto is like a scam. It's a Ponzi scheme. It's, you know, whatever. It's too risky. It's against the law. It's all of these things. And effectively, FTX has proven all of these people right, which ultimately is going to be this huge hurdle for anybody that's institutional coming back into the space and having more confidence in what can be done here. I think the other challenge, and I've said this a lot, is that Web3 is interesting and yet has yet to build at the killer app, if you will, right? The internet has produced a bunch of things like Amazon, for example. Amazon then built, you know, this whole back-end cloud infrastructure piece with AWS. That went on to build a whole bunch of web applications like Salesforce that could be used in the enterprise space. We think about our mobile phones and all of the apps that have come out of that, things like Google Maps and Yelp and so on and so forth, and Uber and Lyft. And those wouldn't have been possible without mobile phones and the internet. And, Web3 and blockchain holds a lot of promise, but I think a lot of us are still waiting to see what's that killer app that blockchain really enables that's going to take off. And it hasn't happened yet. And so there's a lot of speculation that maybe it never will happen, which I don't think is fair. But nonetheless, the impact of FTX is going to make it much more difficult if you're starting a Web3 company to go out and raise the money you need to actually prove that blockchain can be a viable solution for some of our countries and world's biggest problems. All that said, here is the thing that I do hope happens within venture. Over the last 5 years, I have noticed that terms have become increasingly entrepreneur friendly. Now look, I'm all about and I'm all for supporting entrepreneurs and having clean term sheets and being entrepreneur friendly. Look, the entrepreneur is the one that's in the trenches every day building the company. That said, there is a reason that we have boards. Boards are not a draconian thing. They date all the way back to the very first corporation because people recognize that having somebody that they're accountable to, where there's oversight, can actually be a benefit, both to the entrepreneur and the investors, to ensure that everyone's held responsible, that things are kept fair. And what's been interesting is over the last 5 years, venture funds have fought increasingly hard to get access to the very best deals. And that's largely because our government has printed a ton of money, and the cost of capital, the cost of money, has basically gone to zero, which has flooded tons and tons of money into the system. And it's never been easier to raise money, as particularly if you're a venture fund. And so you've got these huge funds that are chasing after a limited number of deals, knowing that there are only a handful of deals that really matter in any given year. And so they're fighting each other on who can be the most entrepreneur friendly. And I think, honestly, that's kind of what brought us to the collapse of FTX. There were a bunch of venture funds that came out and said, hey, we will do whatever it takes to get into the best deals. If that means no board, no oversight, so be it. And in fact, there was one venture fund, Social Capital, that went to FTX, looked at it, said, hey, this is interesting, but we really think you ought to have a board. We really think there should be some good governance and oversight here, and some of the things you're doing, these are some holes. And Sam's response was F you, right? Think about how far we've gotten to the point where an entrepreneur can tell a legit, very well-respected venture fund to basically F off because they ask for something reasonable, like having a little bit of supervision, a little bit of oversight, a little bit of accountability. My hope with all of this is that we revert back to a situation where entrepreneurs and investors hold each other accountable, where we're not so focused on just throwing money at any sort of deal that's out there and trying to fight on who can be the friendliest and the nicest, when what you need is good partnerships. I believe that if we do that, what we'll find is that we'll be able to build really great businesses that have big impacts on people's lives and still generate great returns, both for entrepreneurs and investors and society at large, frankly. Anyways, what do you think? What's your perspective on this FTX collapse and the impact it'll have? Will it have much of an impact? Yes? No? What do you think? While you're at it, check out some of my other videos like, why are there so many layoffs? Thanks.